Good morning from Europe. It's Thursday, the second day of the April. We are here to have a short outlook on the financial market, economic data, and geopolitical news, everything that is related to the financial market, investment, and trading. Uh, Markets was sharply reacted to President Trump's speech just a few hours ago at 9 p.m. by U.S. time while he was trying to explain the Americans why US started this war and what happened and why they needed to go to the war and how long it's going to take. Actually, the news and what we had in the news, what he said, it was not something new. We knew already that. I mean, what he was talking about, what he mentioned in his speech, it was not something new. He mentioned that the war will continue for the next 2, 3 weeks. This is something that we were expecting to see. At the same time, he mentioned that the Europeans, about the Strait of Hormuz, he mentioned that the Europeans should go and open the Strait of Hormuz by themselves if they want so. And otherwise, they can come and buy the oil from Americans. That increase the market risk at the same time. Uh, it supported the risky, safe haven asset, including the US dollar. The dollar index increased while the market risk also went higher. VIX around 25, 26, sometimes even higher. That's increased the US dollar index again higher. We know the dollar index right now is around 100, almost around 100, slightly higher or lower, but around that numbers. At the same time, the oil price increased, the gold price eased, oil price trading around $106 for WTI. Gold price is down around $4,640. What we can understand is that at the same time that U.S. President Mr. Trump had a speech, at the same time we had a speech by Prime Minister, Australian Prime Minister. We had at the same time we had a Macron talks in Japan while he is actually visiting the Japan right now, talking with the Prime Minister Mr. Takaichi. At the same time, the same comments we had from Keir Starmer, United Kingdom. All of them, they are mentioning that the America didn't talk with us before war start. I don't think that's going to be such a fair comment by them because before the war starts, everyone in the world, they knew that this war is going to start someday very soon, and that was something that everyone knew. Everyone were talking about that. So talking about that U.S. didn't tell us that they are going to start the war with Iran or didn't talk with us. It sounds like a more excuse and mentioning Donald Trump that if our allies don't support us and help us in this war in the Strait of Hormuz, they shouldn't expect us to support and help them in Ukraine war. So sounds like Donald Trump is trying to use the Strait of Hormuz as an advantage against his allies to come over and talk about it and take the control of the Strait of Hormuz and take some part of some part of this coast of the war. So generally what we can understand when I'm looking at the speech that Donald Trump had last night, it was mostly about selling this war to the American nations. It was not about explaining what we gained or stuff. Yeah, he explained what we gained in the war and all the stuff about that, but it was not like war. It was not like trying to bring the other allies to the war, to convince the other allies to join them, because he already talked with the allies and mentioned that the things that it was about the allies, it was something that he mentioned it before. So generally, we didn't have something new. That's why the market risk is increased, and this increase in the market, the increase in the risk in the market, again put the pressure on the risky asset. That's why we could see U.S. stock markets had a very negative reaction. I'm talking about the very negative reaction because before President Trump's speech starts last night, Wall Street closed higher. Dow Jones increased by almost 0.5%. S&P 500 closed higher by 0.7%. Nasdaq increased by 1.2%. all the stocks on even the small cap 2000 increased by 0.6%. But right after the speech, the financial market had a very negative reaction. You could see Dow Jones losing by 1.2%, S&P 500 losing by almost 1.3%, US Nasdaq losing by 1.6%. On all these stocks, they have a negative, currently they have a very negative reaction to what is going on in the market. Same thing you can see in the Asian markets. Nikkei losing by 2.4%, but interesting. Not interesting. I have to say that even more than the Nikkei, the Kospi in South Korea losing by 4.5%. This is while yesterday Kospi gained by more than 8.4%, and now they're losing the gain that they had. Same negative trend we had in the Nifty in India, we had in the Hang Seng, we had in China, Kuala Lumpur, Singapore, and all these stocks across the Asia. They had a negative reaction to the news that we had. Same as the futures in Europe, as also the DAX losing by 1.4%, CAC 14 French also losing by 1.3%. All the only positive stock that we had, it's the UK 100 that is not, I mean, that is still at the closing by 0.3% gain, still holding that level 0.3%. I mean, after yesterday's positive reaction, they're still holding this small gain. It's the only stock that only index that we have seen with the positive reaction. As looking at the economic data and economic calendar, yesterday we had interesting news, interesting data to watch. Starting with the let's start with the PMI numbers. Yesterday, the PMIs from across the world we had mostly. I mean, it was the PMI day, while we had unemployment rate in Eurozone as well. The Eurozone unemployment rate increased slightly to 6.2%. But the PMI is interesting. The PMIs, Eurozone, generally the Eurozone manufacturing PMI increased slightly from 50.8 to 51.6. That was actually the surprise for me, to be honest. I didn't expect the positive PMI numbers, but yesterday we had a positive PMI numbers in most European economies, excluding Spain and Turkey. The others, they had some had a fine. I mean, looking at the Germany, the PMI, manufacturing PMI increased from 50.9 to 52.2 in Eurozone, as mentioned, from 50.8 to 51.6. Generally, I mean, the Europeans, they had a positive reaction so far, but they are the initial numbers. We have to wait a little bit to see what will be the final data. Yesterday in United States, we had the NBA 30-year mortgage rates as well, which increased from 6.43% to 6.57%. The increasing in the rates, increasing is in line with increasing with the other bond yields. When I'm talking about the bond yields, let me mention that US bond yields and generally the bond yields after last night President Trump's speech increased rapidly. In United States, we can see the US bond yields 10 years at 4.38. In Germany, it's above 3 again. In Italy, it's 3.92. In Japan, it's around 2.39 almost. In United Kingdom, 10 years bond yields is 4.83. And generally, the higher yields showing that there are a higher risk premium in the market, and this higher risk premium in the market can put the pressure on the stock markets. That's what's happened across the world. As mentioned, as we were talking, in United States, NBA 30 years mortgage rate increased to 6.57% from previous week's 6.43%. That caused for third week in a row to see the applications to lose, to the ease by more than 10%, 10.4% less application we had during the previous week. That was the most important numbers that, about yesterday, I have to mention that the crude oil inventories in the United States increased rapidly by 5.45 million barrels. That's while we could see higher inventories in the API reports as well. So the API reports showing, saying as EIA reports that the inventories in the United States is increasing for the oil and gas. That's which means positive news actually for the the price. I mean, positive news for the prices means that positive for to be under control, not positive in the meaning of increasing the prices. Means that the U.S. inventories is still high. That's why the United States President Donald Trump last night mentioning, according to the Europeans, saying that either you can come and buy the oil from United States, or you can go and open the Strait of Hormuz. That's up to you. Retail sales in United States also, we had yesterday data by 0.6% monthly gain and 3.7% annually. U.S. market shows that the retail sales is still good, and consumers are still ready and willing to pay to buy the goods. That's positive data, shows that the U.S. retail sales and U.S. consumer still they are in an almost expected condition. This is while in Russia retail sales increased by 0.3% monthly, and showing that still the market is not such as good as we had in Russia in the previous months. Unemployment rate is to 2.1%, and wages growth increased rapidly by 8.6%. This is while the business confidence fell by 0.9%. Generally, the mixed picture from Russia, showing that the Russian economy not doing so bad, but it's not doing the good as well. So far today, we had inflation numbers from Korea. The March inflation in South Korea increased by 0.3% only. Annually, it increased by 2.2%, slightly higher than 2% that we had in February, but still lower than 2.4% market expectations, according with the higher energy prices. But still, I don't think that it's totally affected by the new energy prices. We have to be most probably we can expect a higher inflation for April as well. 10 years bond yields, as mentioned in Japanese market, increased. That's why we could see that's why we could see that investment in the Japanese stocks also eased. We don't have that much. I mean, twice more than previous week. In Australia, trade balance increased rapidly, but it's because that export increased by almost 5%, but on the other hand, imports fell by 3.2%. That's not a good news for Australian economy, falling by 3.2% in the imports, showing that the consumers are not ready to, they are not willing to pay for to buy more. Somehow we can say it shows the market is somehow is scary. We should be worried about the consumers, especially if it will repeat in the next reports as well. In Switzerland, we had inflation numbers increasing by 0.2% monthly and 0.3% annually. That's while the inflation in the recent months, we had a lower inflation in Switzerland, and with this higher oil prices, we can see if it continues for the short term, even that can be the good news for the Switzerland economy, because either they had it's somehow it's pausing or taking back, holding back the National Bank of Switzerland SNB to go towards negative rates. So, but now they don't need to go towards negative rates as higher oil prices doing their job. So somehow, if it continues for the short term, it can be the good news actually for Switzerland. It couldn't be such a bad news. Later today, we're gonna have the retail sales from Italy, but the labor market from United States will be the most important data to watch today with the trade balance. Continuing jobless claims and initial jobless claims with the 4 weeks average, the three most important numbers that should be watched, while we have challengers job cuts as well, which is expected to after last months of almost 72% down, I mean lowering with the job cuts. This time probably we can see very slight improvement in the job cuts. But it's not going to be I mean, to shows that the job market is very bad or such a negative situation. but we are expecting to see the job cuts to increase this month for March. Initial claims also for unemployment benefits expected to again showing the numbers around 210, 215,000, which means that the U.S. labor market is still strong, is still resilient, and it can hold the current higher rates for longer. Can afford this economy can still afford the higher for longer. That's generally what happened yesterday. The stock market and generally the market's reaction and what we were expecting to see later today. But with these numbers and with this data, we do expect still the negative reaction in the stock market and the cryptocurrencies. I should mention that the cryptocurrency also had a negative reaction to the speech and geopolitical news that we had. Bitcoin price again is down around between $66,000 and $67,000. Trading around these areas. Same reaction we had, negative reaction we had in the Ethereum, Ripple, and other cryptos. Generally, they shows that the cryptocurrency market is still negative. We don't have any positive news to move them higher or or to show the positive reaction there. Generally, risky asset can be still under pressure with these numbers, with this reaction, and with these news that we have, while safe havens, including the US dollar index, can have the positive reaction. In the short term, with the higher rates, maybe the gold can be under pressure, but still in the bigger picture, we can say that the gold is still in probably buy in deep numbers can be opportunities for now. That's what's happening in the market and what we're expecting to see in the next days with this news. Hope it was useful for you. Talk to you tomorrow. Have a good day. Bye-bye.